Hello there, traders, and welcome back to the TOGS Trading Podcast. This is TOGS 26. This is episode 3 of season 2. And what we're going to talk about is, here we are, we're coming into the end of Q3, and it has been a rather eventful quarter. And we thought what we'd do, as always, at the end of quarters, we always like to go into a little bit of a reflection process and talk about, what we've learned and actually what do we need to take forward into our next quarter. Okay, and of course, we thought we'd also do this is because, of course, next quarter is kind of quite important because of the US elections and stuff. So there's plenty for us to talk about, as always. And as always, I'm joined by Ian there in Dublin, looking good. Billy Ray, how are you doing?
I'm tired, if I was quite honest about it, to be quite honest, because my wife is at home at the moment with COVID. My son's just after getting COVID. So I've been caught out with doing all the rest of the stuff, and it's his birthday at the end of the week, which is it's a big event in an 8-year-old's life. So there's all that sort of organising to do, and it's just been a busy week, really, to be quite honest with you. That's with just family stuff, doing family things, and I wouldn't be surprised if I would get it or have a touch of it or on the way to getting it, because I just feel a bit anyway. That's enough of that. Yeah,
crossing your door there and stuff. The plague and what have you.
So, going through Tesco's.
What day's your son's birthday then? What day's Joe's birthday?
It's Monday week, but the party's on Sunday. So
okay.
So there's two parties, and there's one in the morning and one in the afternoon.
It's my birthday on Saturday. I thought maybe we should this weekend or something like that, but there you go. Obviously not.
It's the 30th,
28th and stuff. Great day and stuff, and it's on a Saturday, so no trading. I never trade on my birthday, and I always tell people,
no,
take the day off, enjoy it and stuff. But it's a good rule for everybody to sort of take on board with that. So, but anyway, that's about birthdays. How's other than COVID and stuff? How markets been treating you? How's your trading gone the last week or two?
It was all right. I have to say, last Friday was not great. So I just had one sort of badish day, and the rest of them are all kind of like, it's one of the things I was thinking about when I was sitting down, how to doing this review, like that how samey it all is. I can go into work and I have a good expectation of exactly how much I'm going to come out with.
Yep.
And how circular it all is. Like, so basically you end up in the same rhythm. So I go into work and I make, in 2 hours, I probably make about 10 points on average, between 8 and 12. Some days are better, some days are worse, but I could be fairly sure now if I go up there, sit up there for 2 hours, like with 10 ES points, 40 ticks.
Nice.
And then every once in a while, then I have just a bad day. So that wouldn't even happen once a month. I'd say it'd happen every, it will be 6 weeks or something like that. And then there's one day which ends up being quite redder than a lot of the other days. And that was the one area, because I was starting to look at things, because one of the other things I did, which is that I set up a Telegram group. And I found that a really interesting exercise for myself, because I had to do everything in public. So having to do things in public makes you very accountable. It's much more accountable actually than the money side of it is, because you're a social animal. You don't want to look like a big idiot. And it made me look at a lot of things that I was doing with trading. Some of the areas where I was a little weaker than I should be. And then the simple like places where I end up doing the same little mistakes and the same little things like that, and it was a different thing. It was setting up a Telegram group. It affected me in a different way than I expected. I think the first week was difficult enough because I wasn't used to having to trade in public, because I am putting out all my trades as I am doing them, or as close as possible.
Yeah.
It made me concentrate a little bit more. It made me not throw in the towel as quick some days, because some days you're just like, today I'm just tired, and I go up to work and I just throw in the towel after 40 minutes or something. So I found that quite good. That was one of the biggest changes I think that happened in the last quarter for me.
That's interesting and stuff. I watch and follow your Telegram group and stuff. There's some grand lads in there and stuff. So it's it's clearly it's a good resource and what have you. But it is, yeah, you're absolutely right. It's that holding. It's a bit of accountability for you, isn't it? It holds you to a standard and stuff, and you want to, and that that can be channeled in good ways. They can be channeled in good ways to basically make yourself better and what have you. And fair play to you as well, especially doing it. Especially when intraday trading and stuff, I find I can, despite my best efforts, I can either trade well, I can either coach well, or I can educate well, but I can't do all three of them at the same time. Especially intraday trading, if I'm just sat there trading, I'm trading, and I'm not interested in answering people's questions or chatting away or jabbering away and stuff like that. I'm just not very good at that. I'm a bit dull, a bit focused and stuff, and what have you, just not NFI about everything else and what have you. So fair play to you for doing that and stuff. Good on you.
Yeah, what I find with it is that it was a nice thing that I realized that I had the confidence to do it, that I had the confidence to put myself out there in that sort of environment where people can look at you and see what you're doing. And I suppose because I was in a Telegram group anyway for years and years and years with other professional traders, so I sort of, in that way, I was a little bit used to the idea, and I use that because you have no company during the day when you're trading your own, and that's one of the big problems that I've always talked about with trading, is that you spend so much time on your own. And I've lost my train of thought.
There you go.
I think it's just because I'm so bloody tired today, actually, that it's
we'll put it down. You've got a bit of COVID brain. There you go. We'll put it down to a bit of that and stuff. But listen, it's all good and stuff, and it's great that you're doing that and stuff. And it is, as you say, holding yourself to a good standard and stuff. And I think that's all beneficial and what have you. When I look at my review of the last quarter and stuff, is that historically, I've always basically pretty much effectively kind of down to tools in August. This is always a strange quarter, because historically, from a kind of third week of July onwards to normally kind of first week of September, it's a bit dull. All right, once you've got the big news out of the way in start of August, everyone kind of gives up and gives everyone's interest. Everybody wants to hit the beach. Doesn't matter where in the world you are or what kind of trade you are. And normally that's what I do. And it's also what I suggest to people, don't try and dick about in markets and stuff. Whereas this year has been quite significant and stuff. And I was looking back on the price action, especially, swing trading at FX and stuff. The moves in the dollar during August were just absolutely fabulous. Just the moves, the strength of the trend where that dollar sell-off occurred. I mean, it started in July, it continued through into August. And it was just glorious, absolute glorious trends and stuff. And the thing is, that's just not what I would have expected. Well, I wouldn't have expected. In an election year, anything can happen. But I think all of that was those kind of moves were sort of fallout from the moves with the Japanese yen and carry trades getting unwound and stuff and what have you. So upon my reflection, I was like, I missed some fabulous opportunities in August, missed some absolutely fabulous opportunities, and I have to live with that. Your initial knee-jerk reaction as well. Do you know what I need to do? As I just need to stop taking holidays in August. I need to work through August and just and work away and trade away on that and stuff. And actually, that knee-jerk reaction is probably wrong. As I said, this isn't an election year. Those kind of moves in August are not typical. And actually, if I had traded all the way through August, I was already in need of a break. It would have meant going into September, October, when we're getting into higher seasons of trading, and that's next week's topic: seasonality in trading. I would have still been burnt out, and the likelihood is, what I could have made in August, I could have easily given back in October and November as we go into the really kind of the busy periods. You have to manage yourself. You have to take breaks when you need it, because the market's always there. There will always be opportunity. Admittedly, sometimes those opportunities are better than others, but you just can't live your life sat on the edge of your chair in front of screens, morning, noon, and night. Trust me, I've tried it. It doesn't work. Something has to give in the end. It always does. And so my kind of reflection was, I missed some great opportunities there in August, but woulda, coulda, shoulda. Do you know what I mean? Woulda, coulda, shoulda. You know.
Mm.
Instead, I was in a pub in Dublin with you and
Mm.
stuff, and there you go. That was the price I paid. Taking one for the team.
Yeah, no, I was just thinking because trends aren't as when you intraday trade, trends aren't as important as they are to everybody else. Like most of the people, like if we're in a strong uptrend, what long trends, uptrends tend to do is they tend to make day trading easier because it's easier to trade mentally
Yeah.
in that direction. And also, I think as well, in some ways, I think they're a lot cleaner because people tend to plan a purchase. So I think I might go long today. I'm going to plan the purchase of my whatever it is. So then they tend to be technically cleaner. And then when you get to the other side of it, then when it comes time to short, then people tend to go, "Oh God, I have to take my profit," or "Oh God, I have to. It's moved against me. I want to hold." It's a different emotional game for most people, and most people aren't as quite good with planning shorts. And then even in downtrends, I tend to make more on longs than I tend to make on shorts because you're always going to hit areas where you're going to bounces, and the bounces tend to be quite good and can be quite viciously up as well, which is quite a good thing. So I don't know the trend in what they need more is more volatility and need a good range.
Yeah.
If you've got 20-point range over a few days, then you're fine. Anything over 10 points, you can sort of trade anything over a 10-point range, but you can't really under 10 points is getting a bit expensive. You know, if you're not wrong, you're not getting it's not coming out the other side. And what you really need is it for to obey your technical analysis. Because it's relatively easy to trade something if it follows your technical analysis. And the problem with that is that tends to happen in high volume environments much more than it happens in low volume environments. Because in low volume environments, some fella presses a button and it'll break the support by accident. He might not have meant to do it. He might not have planned to do it, but that's what's the result of it because it's a low volume environment. Where in this time of year, coming to this time, which is actually going to be is generally quite high volume because you're coming into the earnings and all that kind of stuff coming up. It tends to be a bit more. The ranges open up a little bit, and technical analysis can be better obeyed for the simple fact that there's more volume in the market.
And I think that's a great starting point for next week's pod when we talk about it's a really good starting point, because it leads into all sorts of different conversations and stuff. One of my other own reflections is that I got it wrong on I got it wrong on 2 points. I got it wrong on the I thought the US would cut last week, but I thought that, like the consensus, I thought they'd only cut 0.25%. I didn't think it cut. I didn't think the Fed would cut 0.5%. I got that wrong, and of course, then there was a reaction to it. And this is the kind of learning point I can take away from people can use is that I talk to people about there are exceptions to the rules. You have to have a plan, your standard, which is the rules day, but then you also have to have a plan for the exception day, for those days when there is an exception. Sometimes those days are not clear why they're going to be an exception, right? You don't actually know why it does what it does, whether it breaks out of a trend or it goes back into a range, or it just trends all day. There'll be days when it actually doesn't. You don't have any idea of that. But then there are exception days where you fully understand why the market is doing the thing it is. So last Wednesday night, they cut the Fed cut the interest rate 0.5%. The Thursday morning was literally every man and his dog selling the dollar. All right. It started in the night into that Thursday morning European session. It was literally just sell the dollar across the board. That was, and it was a beautiful trending day on an intraday basis, and there was just some great trades to be had there. And that's an exception day, as in you knew exactly why it was going to basically do that. Also, it broke its average ranges, and so you're basically looking at days where normally for me, intraday, I like to hit a target. I'm a target man. That's an exception day where, this is going to be a day where we're actually, the trend is going to run. All right, the trend is going to run for the session. So why wouldn't you want to try and run it as much as you could on a day that is the exception to the rule? So that gave me a kind of reminder of that. And the other thing I got wrong is that sterling has been, by my own model, sterling has been knocking about the kind of the strength, the sort of top end of the matrix that I create and do and talk about on Monday lunchtimes and stuff for people. And it is a case of that sterling strength. I think, I stick to my biases that that sterling strength has been a case of others' weakness more so than any significant strength in the UK itself. And it's a kind of another lesson of you have to trade what you see, not what you think. I can have my own opinion about why that sterling, it's almost like falsely strong, but the reality is sterling has been in great trends. Okay, for throughout the whole of September, there's been some absolutely fantastic trends. Admittedly, also linked to, once again, weakness in dollar and also weakness in Swiss franc and Japanese yen coming through. And they have been great trends. And once again, you have to realize you just have to trade what you see, not what you think. Just basically trade what you see in front of you. Don't overthink it. You're never as smart as you think you are. Just basically, if it meets your rules, take the trade.
I don't like sterling being strong because it makes booze and Sainsbury's more expensive in the north of Ireland. That's a problem, because generally when it's quite weak, you can save quite a lot of money. And down here, they can't do multi-buy offers, which they can do them in Sainsbury's. So you get like buy 6 wine and it's 25% off, which they don't do down here.
Getting the car up to Newry, getting across the border, getting yourself out.
It's absolutely, it's terrible. So I like to see sterling go down because it genuinely just simply affects the part of my life.
That's it.
It does. Yeah.
And of course, it's certainly against the euro, where it's been breaking to new lows and stuff. Yeah, you're absolutely right. That kind of east coast of Ireland, the N1 and stuff. The road is busy because everybody's going north of the border to basically try and make the most of the difference in the exchange rate there.
I think it used to be even bigger because people used to drive across the border. Like if you're anywhere closer to buy petrol, because on one side, because you used to see in the north of Ireland, you'd see a petrol station on one side of the border and a petrol station on the other side of the border. It'd be owned by the same people. But they just, to be open, at the moment in the south of Ireland is cheaper, and the north of Ireland is it's more expensive. And that was the real face, the cold face, really, I think, of currency movement was petrol stations in the north of Ireland.
That's right. That's right. Yeah. Here we go. This is an aside. There's a place I go up to just on the border, just outside of Dundalk. It's like I won't mention the name of it and stuff, but it's a very nice. It's kind of like a cafe, garden centre. It's all very chic. It's all very, very nice. My partner, she loves it. But your man who ran it, basically, it was his business after he got out of prison, and the reason he'd been in prison is because he had made a fortune, basically, with, let's just say, dubious accountancy practices across the border, back and forth, basically making the most of the difference between euro and sterling there, and what have you, and had done very, 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 very well for himself. But as all these things, he basically didn't manage the business too well, and ended up doing a bit of a stretch. And now, of course, he's a redeemed soul, still living on the border, still running a business that basically has clients from across the border doing all right for himself. And one of those things about spending that time is there is, of course, we sit in front of charts and screens all day looking at blips on a screen, right? Just looking at blips on a screen, going back and forth, and sometimes things like that help, make you realize that actually, these do have real world implications. Those kind of big moves and stuff there, and you can see it when you spend time on that border there and stuff. You can literally physically see it, even just in the flow of traffic, which way it's going, one way or t'other, based upon who's getting the better deal of from the euro sterling rate, isn't it?
Yeah, no, absolutely. By the way, it's a matter of interest because I sport shoot, so that's where all the ammunition comes from, is the north of Ireland. So it all gets imported. Nearly all of it gets imported into the north of Ireland, and then it makes its way down south. It gets imported down here. And I've been into a place in the north of Ireland once, which is a wholesaler for ammunition for the south, and it is just the most amazing place because it is just containers full of bullets. You go around going, I want some of those, or I want some of these, or whatever it is. Like it's a different culture up there in the north.
That's your kids shop, that, isn't it? That's you. All your Christmases come at once.
Yeah, indeed. Well, as I was saying, so other things just with the trading. When I look back over the while, I had 66% of my trades are winners, which is down from 72. But they tend to actually a little bit more. I tend to make a little bit more money now at the one per trade. Because win rate is one of those things that people look at. And it is the most meaningless thing in the entire thing of trading, because you could have lost in trading for 50 years and bought 100 Bitcoin for $29 or something. And that one trade would have, made you a millionaire.
Yeah.
So, win rate is relatively meaningless. It's your risk reward. That's the more important thing. One of the other things I became more aware of time, because it's been very busy for the last little while, and it wasn't so much. And then I had a great realization that it wasn't so much that I wasn't in control of parts of my own time, or I didn't have things I needed to do. It was the time of day, because you have three moves in any one day. You have the 8 o'clock move in the morning. Basically, that's when everything starts off. Then you have the around the 2 o'clock, well, really around 3 o'clock in the afternoon, that you tend to have the cash session, and then around 7:30 in the evening, you tend to have the third move. And you don't have to be there as a day trader, you don't have to be there for very long, but you have to be there for those times a day, because if you're free at 12 o'clock in the afternoon, you're only wasting your time.
Yeah.
There's no you're only using up energy sitting in front of the computer, and you have 2 to 3 hours of good concentration every day, and you're just using it up at the wrong time of the day. So I found that time of day was as much as important as and then it was the circular. The other thing that really occurred to me as well was the circular nature of problems. In that, when I read over old journals, because it happened a couple of years ago, or a few years ago, 5 years ago or something, I happened to read a journal that I had written about trading from about 5 years before that. And I was in some ways suffering with exactly the same problems in trading, but they had reduced. So the effect of the problem had, like, take over trading, for instance. Everybody overtrades. I would argue that every single trader, even the best trader in the world, will overtrade occasionally, because they'll do some sort of impulse thing. They'll misguide, they'll misjudge something, and that's it, and effectively overtrade. It's just the effect of your mistakes have on your trading, and that's what reduces, I think, in some ways, rather than the actual actual process of making that mistake to a certain extent. And that's one of the things I noticed, is how, with a lot of the things in trading, I tend to go circularly. Like, I'd like to change. I've always wanted to change to a longer term trader. And then so every 3 to 6 months, it comes into my mind, I'm going to trade this way.
Noticed.
Yeah. And then I go out and I try and do it, because it happened to be again last week. I went out there and I said, you're working too hard for your money. Why are you doing this? If you just left that long on that you put on at 12 o'clock and gone away and stared out the window, you'd have 30 points instead of 10. And then I go and I do the same process again. So I go and I try and actually do it. I have a spread betting account I use to test all these hypotheses that I have. And then it fails, and then I go right back to doing what I was doing in the first place. So it's a circle. You're doing a lot of things are very circular, and I think that most problems in trading are either small, quick circles. So you have a fear cycle. So you get into a fear cycle, and then you do the same thing, and it's all over in 20 minutes, or like that cycle, which can take 3 weeks every 3 months for me to work through that cycle and go back to doing what I was doing in the first place anyway. Because one of the things I was really realizing as well is that with my own trading, like it's and my own style of trading, is that because you're trading for very small amounts, very small moves, you have to, the only way that you can really make like a lot of money doing that sort of thing is to move big volume.
Yeah.
And that's a big psychological hurdle to cross, because if you spiral, if you have a bad day, like, it's in relation to the size of your account, of course. If you have a bad day, that can really hurt, to a certain extent. So I even thought about, going out and looking at what you call them, prop houses or something, even to see what, because I see some people doing it with prop houses. They get in about £1 million worth of somebody else's money and go and do it that way. I don't know. It's just something anyway. I was just looking at, to to if I wanted to move it to, like, if you're making 10 points a day, that 10 points a day can bring in 500, or that 10 points a day can bring in 50,000, depending on your volume. There's nothing else really to think about. Yeah, so that was a big part of looking at the whole thing, was the circular stuff of it. Really was a bit of a thing.
I think the circular. I don't know. Maybe I'm wrong. I don't think the circular thing is such a bad thing in the terms of, if every, let's say, 3 to 6 months you go through a little experience of just basically reproving to yourself that actually, do you know what? I'm a scalper. I'm good at scalping. This is what this folks. I don't think that is necessarily a bad thing. I don't think that's necessarily a bad thing at all. And I think that actually it can be a very positive experience if framed correctly. In that it's not like it's not like you're saying, I'm good at scalping. Do you know what? I think I'm going to use my entrepreneurial skills now to start importing cocaine or stuff like that. That is going off the ranch. You just basically tickling the soft underbelly of swing trading and just realizing that actually, do you know what? You should just stick to what you know is no bad thing. I don't think. I think it's a part of that is about framing it. It's not a case of necessarily using it as a stick to beat yourself with, but as just framing it as just part of just reaffirming and recommitting to what you are and what you're good at.
I think when I was just sitting there and I was thinking about it, I think it's actually it's a fear-based thing, really, at the end of the day, because as I was just saying there's only two ways to move forward in trading. It's either you get small amounts over a long period so if you go in, there's a trader I know who trades about 10 to 20 contracts, but he traded for 100 points, and he'll do that once a week, twice a week, something like that. They're very gross figures, very basic figures. And probably wrong. But anyway, so he's taking a relatively small amount and he's trading it over a big move. And therefore he comes out with big money at the end of the week, where I have to either do that, which is fine. So I would be trading the thing that's going on in my head is I'd be trading the same position size. So I don't have to change the fear side of it, but I want to get the more money out of it. Where in reality, the way that I am now, the way to do that will be to increase your position size, and then get the thing out of it. And it's a wanting to skirt fear, I think, really, in myself at the end of the day, in not wanting to trade these big, huge position sizes. And then the other thing which really I copped onto during the week was, when I was doing this thing is there's 1 or 2 trades a day, usually maybe 1, maybe 2 trades a day, and those trades you just know them. You're just really invested in that trade. You really know that this trade is going to go. And it's generally something like the bottom of range, the top of range, the bottom of range, the middle of range. There's 3 main areas where price has to make a determination about where it wants to go. And
agreed.
And so it's waiting for those. I'm terrible at waiting for things, and that's a real weakness that I have. I don't have that sort of ability to off-put immediate pleasure, to whatever it is. Like when I was a young fellow, we used to be out shooting rabbits. I'd bring 2 boxes of shotgun cartridges with a cousin of mine, and he'd bring 6. Mm-hmm. And he'd come home with 6 rabbits, and I come home with 6 rabbits, but I come home with no bullets.
That's a great example. That's a great, yeah.
And then things like, I tend to like, I drive fast, and I'm one of those people that would drive relatively fast, and I tend to be quite impatient with everything, and so that reflects. And then your trading style is a reflection of your personality and your wants and needs. It's not a reflection of the market. Like, trade double bottoms. There you go. There's your whole thing. It's your whole belief systems around that is the whole lot of it. And so I find that that the waiting for those one or two trades, I'd be bloody well make way more money and work half the time if I would wait for those trades. And I know that in my sort of heart and soul, but to actually do it is that's a big thing. I mean, even if you're at the bottom of it, like most ranges are like 20, 25 points wide.
Yeah. You know, it's the differential, isn't it, between like, you know, kind of plans and action. You know, and most of us know what we need to do. Most of us, know who we are and what we are, but actually being able to enact that on a consistent basis day after day is the tough element. And so, you know, hence, you know, you get into drivers, which kind of links a little bit to your earlier comment about how your hit rate's about 66% for this last quarter. There's 2 points there. I would say, I would agree with you that people focus on hit rate far too much. But I do think it does have an importance, but only in relation to your risk to reward, as part of understanding your overall expectancy. You know, just as a piece of data on its own, or a number on its own, it's pointless. It has to be part of the kind of the context of understanding that. But what I would say is that, I generally have found over the years that, especially for shorter term traders, intraday traders, that kind of 66% hit rate, rightly or wrongly, is kind of the sweet spot. All right, intraday traders, they kind of are comfortable at a range of being, you know, right 2 times out of 3, only kind of one losing trade in 3. Okay. The reality is they probably could make more money if, like what you've just said, that, you know, if, you know, they were only right one time out of 3, but they were able to hold those trades and generate higher levels of reward to risk. But the reality is, most people, it's comfortable in terms of managing, whether you want to call it managing their own ego, managing their own performance, managing their own psychology. They're comfortable, and they can consistently do it if they're operating in a space of, you know, being right 2 times out of 3. But then once again, you still need to understand your reward to risk. If you are, you know, your reward to risk is 1 to 1 and above, well then, you know, 66% hit rate is nice. You know, you're there. You have positive expectancy. If your reward to risk is, you know, you're risking £100 to make £50, well then, you know, you might have a nice sweet spot, 66% hit rate, but you're not going anywhere, right, in terms of your overall expectancy, your own turnover, your own business and stuff. So yeah, I've noticed, as I said, that's a kind of a bit of a nice sweet spot that intraday traders like to get it. They can live with that. They can maintain that. They can be consistent with that. They're comfortable with that. It doesn't cause them too much fracture of their ego or their personality and stuff. However, they need to understand the relationship with their reward to risk to make sure whether that is actually generate positive expectancy for them. And also, you also have to think about how you are counting scratch trades. Okay, I on an intraday basis, I count my scratch trades separate from both my wins and losses, because otherwise they can inflate your win numbers. All right, if it's a scratch trade, you can inflate your win numbers, and it once again, it doesn't give you a false gives you a false representation. And as an intraday trader, you should, your wins, your losses, and your scratch trades. I have much more scratch trades on my my very short-term aggressive trading, because I mean, if it's not working, I'm out, and I'm not hanging around to find out. But there you go. That's learning points from years of working with intraday traders as well.
Yeah, no, because when I started off intraday trading, actually early enough, my win rate was 82%, but I was making no money because I was having so many scratch trades, and I was having so many, and I wasn't letting anything run because I wasn't taking any risk, with any of the trades. And I remember looking at the analysis afterwards and going 82%, and I'm still not making anything. What's going on? To a certain extent, it's hard to maintain your risk reward. Actually, getting a win rate, I don't think is really that particularly difficult on to find trades that will go for you. Isn't actually that difficult on day trading, because it's almost any crossover of a trend line on a 5-minute thing with the trend is going to do something. It's when you're wrong, it's the controlling the loss side of it is really, because I ideally like to lose no more than 3 points on a trade, because my average trade size is anything from 3 to 9, 3 to 10, 3 to 9, whatever it is. And And the volatility, when you're in something, the volatility in that little move might be more than the 3 points that you want to go into it. But what I end up doing sometimes is I have to let it run. Like, I don't use a hard stop. I have to let it run below my mental stop, because in the idea that it will bounce back into it and let me out for 3 points, you can get caught out so much. And what throws your risk reward off is the hardest part to deal with. Is that there's always that one trade that you mishandle. There's, if you're doing, like I do, maybe 5 trades, 6 trades in the 2 hours that I'm there. So that is, there's always going to be one little trade in there. Some, not on every day, but every few weeks, there's going to be one that you're going to mishandle. That's going to cost you 4 times more than it should have. You're going to do something wrong. You're going to add in the wrong place. You're going to do something, because it's every rally driver has a car crash. Every boxer gets knocked out nearly once in a while. Maybe not every boxer gets knocked out, but something is going to go wrong. There's always one little thing, and that's really actually the area that I would find it the most difficult to deal with is that trade. That's the trade that gets me. But what I've been working on is trying to work out when and where that happens. So I know the circumstances. Busy morning. The trend in the market is down, because I find that hard to work with more mentally, or harder than than an uptrend. I'm tired, so there has to be something. I have to be mentally busy and a bit distracted. And on Fridays, all my worst days are on Fridays, and that's because I'm getting to the end of the week, and there's a thing inside my subconscious just wants to get this over and done with. You've got to a certain part of the week and because on Fridays, because I'm the most hesitant sometimes to get into anything on a Friday, because I've had a good week. So why do I want to go into a weekend with the memory of a loss? And and then I'm the most. That's my most vulnerable time. So if sell off, tiredness, busy morning, downtrend, those four things. If I see those 4 things, I recognize them now. Sometimes a little bit too late, but I recognize them because we've done a lot of work and working those out in the last little while, like, just to get rid of those. Because if I got rid of those really bad, those occasional once every 6 week trades, that one trade, so then I think I'd be as happy as Larry. I think it would be a big move forward in my own trading.
No, I've told this story, hundreds and hundreds of times, that the first hedge fund I worked for, percent of my losing trades were on Fridays, when I was doing my analysis, because I would start at the weekend. I would start in those days. I was trading gaps, so starting like Sunday, and so by Friday you're just mentally frazzled. You're done. And so in the end, I just actually didn't even go into the office on a Friday. Just didn't even go into Friday, because I just needed to be away from it and actually just refresh. So that I was in a good place to do that. But no, I don't agree with it. I think the other point I'd make on that, there's there is always that one trade that you can mishandle, that can be an outsized loss, but then also there is the reaction to it, making sure that it doesn't trigger you into either revenge trading to try and chase back your losses, which it rarely ends well. And even if you do get it bad, that's the worst thing that can happen, because actually then it sets a neural pathway that, whatever happens, I can make it back. And that just basically generally tends to sort of lead to indisciplined trading. So there's that, there's always that one trade that can do you. And also a case of how you react to it, making sure that it doesn't trigger like a domino effect, in terms of you trading 3, 4, 5, 6, 7, 10 times that day, trying to basically chase your tail and revenge trading, because it rarely ends well, and that's something you always have to be. You always have to be cognizant of. You always have to realize that it's there. That it's like those it's like those kind of Top Gear, Grand Tour TV shows and stuff, where they're driving the car, and then they always have that that really bad car that's just following them around and stuff. And it's like that in terms of, there's a bad trade following you around, just waiting for its opportunity to kick you in the arse and stuff. And you have to be wary of it and stuff. So listen, we can talk about this tons of time. So let's start to finish off by actually talking about, well, what can we carry forward? This is going to be calendar Q4. All right, it's the last few months of the year. What can you, as a trader, start to take it forward and say, well, actually, this is how I'm going to make these last few months really good, really solid. I'm going to finish the year on a high. And that doesn't necessarily mean in terms of percentage return or outcome. It could just be that you trade well for those last few months, because, of course, we also have the US election, sort of looming over us. We're probably about 5 weeks away, maybe 6 weeks away from it. For us here in the UK, we have the new Chancellor, Rachel Reeves. She's going to be doing her budget on the 30th, and I don't really think much in the UK, companies-wise or trading-wise, is going to happen until after that myself. So that kind of week, end of October, start of November, certainly for myself and probably others here, it's going to be a rather eventful. Okay, and I think it could, change things dramatically. So, what do we do as traders to basically help ourselves be good for the next quarter in? What are the sort of things to be looking at?
Well, just the last thing I want to say about the other thing is that the effect of a bad trade for me is 3 days. It takes 3 days to get over a one bad trade. That's just the last thing about that. When I was looking at that, I looked at the going forward thing, and I looked at it in a completely different way. So I sat down and said, like, what's actually my idea of success?
Yeah.
At the end of the day, because when you start off, like an awful lot of when a lot of guys go into trading, it's that they're looking for a certain type of success, and they want that very basic financial success, and they want that for personal reasons, for their own self-aggrandizement or whatever. They want to, they're looking for society, basically. They're looking for something back from society by doing this one thing really well. I have never met anybody who went into trading because they like maths. Maybe you've met them. I've never met one. They're going into it they want to have a side business. They want to make some money. They want to, it's a very accessible business because all you need is a phone and 50 quid, like, you can start off and gamble away. So there's that thing in it. So what actually are you doing this for? Like, would you be happier driving a taxi? At the end of the day. And what I mean by that is it's a tough job. What's your idea of success at the end of the day? What are you actually looking for? And I think that's a big thing with that. So on the other side of it, for actual trading stuff that I have to do, that I have to look at, I want the getting rid of that one big loser trade. Tightening up losses basically is effectively something, because if I have to make a leap onto the next level and really bulk up my position size, I can't have that follow me around as it's with the Grand Tour, which I thought they phoned in the last one, to be honest with you. It wasn't. I watched it.
I thought it was better than some of the other stuff. It was, but it's right that it's ended. It's right that it's ended. I think.
They're getting a bit old for that sort of thing. So that's one big thing. That's probably, if I got that done in the next 3 months, I would be as happy as anything, because you don't want to overload yourself with stuff. It's the other thing as well with reframing or really looking at what you actually want out of your life is that it takes an awful lot of pressure off trading, because then you're not worried about it. Because you're not trying to turn yourself into this amazing person who is doing whatever huge amounts of things or something, or maybe that's just because it's Wednesday and that's how I feel today. I don't know, but anyway, so that's my biggest thing anyway, is to work on downsides. I have all the setups, I have all the experience, the account is big enough, everything is there. It's these tiny little things that always follow you forever, and that's what I just want to get rid of them. That's all I could want to do.
No, I think that is. I think that's a fabulous plan. We see it on social media and elsewhere and stuff. Everybody chasing, wanting to the best setup, the next best strategy, the next best trade. Whereas, in fact, actually, for most people, like good business, actually sort of just reducing your mistakes, reducing your costs, reducing your expenses is actually a really, really good business endeavor to be doing. Just tightening up the way you operate. cutting out silly mistakes, cutting out repeatable mistakes that you find yourself, why am I doing that again and again and again? You do it once or twice, that's fine. You start doing it continuously. Well, there's a choice at some point, at some level. There is a choice going on, and why are you making that choice? What's the real story? What's really going on here? And I spend a bit of time to unpack that and find out what the hell is actually really going on here. That can be enormously helpful, enormously beneficial and stuff. I agree 100% with you that. In terms of what I'd be looking at as a the kind of like the big picture, in the UK, I just don't think anything's going to happen until the budget, and I'm curious to see what Starmer and Reeves have been putting out. It's all about, it's terrifying people. Really, it's fearful, and I'm waiting to see. Okay, are they basically trying to put the fear of God into people so that actually, when they do come out with the budget, even though it's terrible, they can say it's a win because it wasn't as bad as it could have been, but actually it'll still be bad. All right. Or is it a case of actually they are complete Egypts and they are going to hammer everybody as hard as they say they are? Because I think that will have a huge impact on huge impact on UK markets, but also huge impact on sterling, which is kind of my main sort of trading instrument, etc. So I'm watching that with bated breath, to see how that particularly plays out. And then, of course, we've got the US election. I don't think it's really, we might hold our own political ideas about elections in general and stuff, but ultimately we're just traders and we just want to see where is the opportunity ultimately. Where opportunity can markets help us? I put out a thing a month or so ago about actually how tracking DGT Trump's media company, tracking that on the markets, gives you kind of a bit of an indication of people's confidence or lack of in Trump winning. It jumped to new highs after the first assassination attempt, but then as we were saying before, Harris and let's say the slick media campaign that's been running, she's outspending him by $5 million a day, I think, something like that. The share price, Trump's share price has been dropping, and that in itself is. I come from the very simple school of always follow the money. Follow the money. All right, it's the simplest way I know to basically, because if someone's actually put money down, they've got conviction. It's easy to sit on the sidelines and spout stuff, but always follow the money. So I'll be keeping an eye on that, and also keeping an eye on the dollar Mexican peso. He made a couple of comments this week about if John Deere moved their factory there, he's going to put like a 200% tariff on them, and stuff like that. Well, things like that, they will have impacts on the dollar Mexican peso, also the dollar yen and stuff. I'm watching that and how that reflects compared to like US treasuries, etc. So it's going to be an interesting few weeks. It is going to be a very
absolutely. I think there's even bigger things with that, with the whole Trump thing, because Trump's an isolationist, and I think you've all the Israelis are now bombing the Lebanon, the Ukraine and Russian war, and it's every one of those has the potential to escalate, and every one of those has the potential for somebody to set off a nuclear bomb or do something bananas. And Trump, if he got in, he would put an end to an awful lot of that. So from that kind of way, I'm really hoping that he gets in so he can save civilization
and stuff. I think you'd see defense stocks and what have you, because of they've effectively been on a tear for the last couple of years since Ukraine started. And since the Middle East, etc. So there will be opportunity. There is always opportunity. It's about being savvy. It's about being savvy and stuff, and how we operate. And so I think we are going to do two future sessions. One in the kind of the week before the US election, right? And what does it entail? And then I think one after the election, because actually, all right, so the election's gone on. What now? What do we do? What do we do now and stuff? And so, we'll have a bit of an idea more about what's going on there. So, So anyway, listen, let's draw it to a closing, because as always, we could end up chatting all afternoon about this and stuff. So, hopefully, for people listening to us, thanks very much for sticking with us. As always, Please subscribe. If you've got comments or thoughts, all right, reviews, please. We always love to hear it and stuff. But hopefully, it is giving you a little bit of help just to realise, how at the end of quarters we like to just reflect upon what's going on, what we can learn, what mistakes have we made, how can we adapt that and then overcome them for the next quarter forward. It is going to be an interesting quarter, so I hope you're going to join us for the weekly sessions in season 2. So yeah, I'll just say, is there any final point, Ian? Any final comments there?
Nothing from me anyway for the moment.
Grand.
Finished.
All right, nice one. All right, well, listen, thanks very much for listening, everybody. Thanks for joining in and stuff. Hope you have a great trading week. We'll be back next week, and until then, trade well, everybody. Cheers.